How's it going everyone? Welcome back to AZ Trading, and in this video I'll be showing you how we managed to capture this large bearish movement on the NASDAQ, which is over 100 points so far. But not only that, on the Dow, the US30, we've also taken the exact same trade and we've captured over 200 points. Most of you already know that the trades I take are not in hindsight, and I have the executions and the proof to back it up. So for the US30, I'll turn on my positions, my orders, my executions, as well as the labels. And as you can see, our entry is quite precise and we've taken 2 partials so far. And once again, here's the NASDAQ 100, here's my positions, my orders, and my executions as well. And now with the proof out the way, let's get into the strategy that we used to capture both of these moves. Alright, just out of simplicity, we'll be doing our analysis on the US30 since the one on the NAS is exactly the same. So the trading strategy and the framework that we use is called the RMR pattern, where first we look for a raid. And as you can see, prior to the London Open and before the day has started, we're in this consolidation range, which means above and below this range, there's resting liquidity. So if we scroll through price, we can see this high being made in the London Open. As price broke above that swing high, this is what we can call the raid. I've just zoomed out into a 15-minute chart since it's a bit clearer, but after the raid, the second thing we look for is the market structure shift. So during a bullish raid, afterwards we look for a bearish market structure shift, which means swing lows need to be broken. And as this bearish candle breaks through the previous swing lows, this is what we call the market structure shift. Back on the 5-minute chart, we can see that during this bearish market structure shift, price is very decisive, which means retail traders will be FOMOing, meaning they'll be placing shorts here, placing shorts here, placing shorts down here, because in nature, retail traders tend to chase price, meaning they short when price is going down. Because if you chase price and say you placed a short over here, the area where you place your stop loss will be very large and not very practical. So to prevent this from happening to us, instead of shorting when price is going lower, we want to be shorting as price is going up. This sounds quite counterintuitive, but the only way you can find precise entries with minimal drawdown, just like this one over here, is by placing short positions as price is going up. It feels daunting when you haven't done it much in the past, but this is a good habit and a good practice to learn. Alright, so where do we find our entry point? This is the third part of the RMR, the return, and in most cases we can look for a gap that's been printed. So if we look to the left, we can see there's some gaps over here. There's another gap a little bit higher over here, as well as a little gap at the very top over here. So once you've identified those gaps as your return areas, this just means when price retraces into that area, or into this one, or into this one, that's where you can place your shorts. Now, if you're asking yourself, which gap do I pick? This is completely up to your own trading framework. Since all of these follow the RMR pattern, however, each entry point is slightly more optimistic than the other, meaning if you're happy with an okay price, you'd place a short over here. If you want a really good price, you'd place your short over here. And if you wanted an exceptional price, you could place your short once it retraces into the top gap. The downside towards having such optimistic entries is that price is less likely to retrace into the optimistic area, and more often than not, it'll reach a lower return area before dumping. However, in this case, I've waited for my optimistic trade entry, and that patience that we had has paid off. Alright, once you've placed your entry, the first thing to set is your stop loss, meaning to place a hard stop loss as opposed to a mental stop loss. And once you've done that, now we can look for objectives below. So for objectives, I look for areas with liquidity and areas with gaps. And as you can see, we have a swing low over here. We also have a gap over here, as well as another gap down below over here. So at all of these objectives, you can take off a partial, and depending on your framework, you can choose how much you want to take off. And I'll just turn on my execution labels once more. You can see that at my first, second, and third objective, which was just hit, which will leave me 10% of my original position to run, with my stop loss brought down to the break-even level. And now I'm happy to let my trade run, whether it completely dumps or stops me out at my break-even level. It doesn't matter to me at this point. And if you're curious what's going on in the NASDAQ, I've just changed over to this chart with our third partial just being executed after hitting that gap, leaving 10% to run with our stop loss to break even. But overall, we've actually managed to capture a monster of a trade on the US30 spanning over 300 points. And if you have a look how precise our entry was, we only had to go through around 9 points of drawdown in return to capture this large move. Alright, that'll be it for these trades, guys. I wonder if any of you saw this live as well. If you did, amazing job. This is a great trade and keep it up. But if you enjoyed this video, don't forget to leave a like and subscribe. It makes me very happy. And if you've got any comments, leave them down below. I'll definitely get back to you. But until next time, take care, everyone. Peace.